Good day, everyone. How's been your week? I hope it's been profitable. Please confirm you can hear me. Confirm you can hear me. Also confirm you can see my screen. You're welcome to today's live stream. I feel so excited to have you in today's live stream. Can you hear me? Can you hear me? If you can hear me, please drop a comment. I want to be sure you can hear me loud and clear. If you can hear me loud and clear, please drop a comment. You're welcome. If you have any question, please drop it in the comment section. If there's any pair you'd want me to analyze, let me know in the comment section. Has been your week? Has it been profitable, negative, or you break even? I'd like to know in the comment section. Mr. Sam, good morning. Has been your week? All right, all right. What pair are you looking at today? What pair are you looking at today? Let me know in the comment section. Good morning, Mr. Debayo. Good morning. Thanks for joining. If you have any question, drop it in the comment section. If there's any pair you want me to analyze, let me know in the comment section. So we'll start by looking at the fundamentals for the day. Today is 21st. Today is 21st of August. So two major news have been released, one from Euro and one from Great Britain. German flash manufacturing PMI. As you can see, the actual as you can see, the actual year is 49.9 and the forecast is 48.8. And whenever the forecast, the actual value is higher than the forecast, that's positive for the currency. That's positive for the currency. And we have on German Flash Services PMI, the forecast is 50.4 and this is 50.1. Yeah, that's a difference of 0.3, which is not much. Okay, so this is, we could say this is neutral, this is positive. Okay, so this is positive for the euro. This news is positive for the euro. Okay, as you can see, the previous on German flash services, the previous is better than the actual. Okay, so this is positive for euro. Then Great Britain released its own flash manufacturing PMI too. It was negative, 47.3, 48.2 as forecast, and flash services PMI positive. The forecast was 51.8 and the actual. So I think this is positive for Euro and Great Britain. Okay. I think it's positive for both currencies. Then by 1:30, the United States will be releasing its unemployment claims data. The previous is 224 forecast, so they are expecting an increase. Yeah, it should be an increase from 224 to 226. Okay. So if the data comes out, if the actual is less than the forecast, that will be positive. Okay. This is unemployment claims, not employment. This is unemployment. So the actual value should be less than the forecast for it to be positive for the United States. If the actual value is higher than the forecast, that will be negative for the United States dollar. I hope that is clear. Then by 2:45, United States will be releasing its flash manufacturing PMI data and also flash services PMI. So if you're considering trading the dollar pairs, the best time to execute your trade will be in New York session. In New York session, after this news is released, after this news is released, that's when you should look to trade USD pairs. Okay, so now you know that the news that was released for Euro and Great Britain is positive. If flash manufacturing PMI and flash services PMI is negative for the dollar, then you should look for buys on Euro USD and also GBP USD. If flash manufacturing PMI and flash services PMI comes out negative, there will be a massive bull run on Great Britain pounds USD and Euro USD. I hope that is clear. If you have any question, good morning, Mr. Isaiah. Okay, you're on Euro USD and good. Okay, we'll analyze that in a few minutes. Okay, Mr. Atonda, you are break even. That's good. That's good. Break even is better than being on the negative. Good morning, Mr. Isaiah. Okay, so let's look at DXY and yen before we look at currency pairs. Let's analyze. Let's start with yen basket. So as you can see, what do we have on yen? What do we have? What do we have? Okay, so you can see what we have here. Yesterday, price pulled back. We had this swing high. We had this swing low. If you apply your Fibonacci from this swing high to this swing low, you can see that price is at a premium area. Price is at the premium area, and after the close of yesterday candle, let's go down to 4 hour. If we're able to identify a bearish reversal pattern on 4 hour, then we should be considering selling the yen today. So what do we have on 4 hour? Let's see. So you can see on 4 hour we had a bearish reversal pattern on 4 hour. Okay, we had a bearish reversal pattern on 4 hour. This is Marubuzu candle. Or you go down to 1 hour if you're not too sure this is a bearish reversal pattern. Go to 1 hour. There must be a bearish reversal pattern. You can see on 1 hour. You can see we had a spinning top here. This has confirmed a change in trend from bullish to bearish. Okay, so this is a bearish setup on yen baskets. So you should be you should selling the yen today. You should consider selling the yen today. Yen is losing value, so you sell it. You sell currencies that are losing value. You buy currency that you feel will get value. Okay, so yen is losing value, so you sell yen. So that's it for yen. I think it's created. Let's go down to 1 hour. Okay, so on 1 hour, do we have a fair value gap here on 1 hour? Let's see, 15 minutes. Okay, there's no fair value gap here. No fair value gap here on 15 minutes time frame. Okay, no fair value gap here. Let's see 5 minutes. You could wait for a little retracement. Wait for a little retracement before you sell. Okay, wait for a little retracement before you sell. Okay, you could look for sales from this zone. Okay, you could look for sales from this zone. Okay, like I always advise, price retracing back to your point of interest is probability. So if you have good funds, always go in with small lot size. Okay, let's say the normal lot size you trade with is 0.1. You can go in with 0.05. Then if price pulls back to your point of interest, you can take more trades. That is what I advise, because that price will go back to your POI is not guaranteed. It's not guaranteed. So you can take 50% risk. Then when price pulls back, you execute the remaining 50% risk. Okay, so that's my take on yen for today's market. My bias for yen is bearish. My bias for yen is bearish. Joro boy, good morning. You've missed class for some time. Hope you're okay. Hope everything is fine. Joro boy. Okay, so let's look at dollar index. So this is 5 minutes. Let's start with the daily time frame. So what are your thoughts on dollar index based on the pattern you have on the chart? Is dollar index bullish or bearish? I'd like to know your thoughts. What's your take on dollar index based on what we have seen on the chart, based on the pattern we have seen on the chart? Bearish or bullish? I would like to know your own take. What's your take on DXY? What's your take on DXY? Joro Boy, Mr. Isaiah, Mr. Sam, Mr. Atonda, what's your take? Okay, Joro, okay, you're in camp. Okay. What's your take? Okay, so yesterday candle, as you can see, it closed as a spinning top. It closed as a spinning top and bearish. Okay, Joro Boy says bearish. I think I agree with that. I think it's bearish because yesterday candle closed as a spinning top. Mr. Isaiah says bullish. Let's look at it together. I think I'm bearish on. Mr. Sam says bearish. Yeah. So yesterday candle closed. I've always told you first thing you need to look at is the candlestick pattern. How yesterday candlestick closed will determine the direction for today's market. So yesterday candle closed as a spinning top, and a spinning top indicates change in trend from bullish to bearish. Okay. So I think what they've done this morning was to come sweep the liquidity. They know most traders that have executed sell, and their stop losses will be residing at this previous high. And I think this morning they've gone for that high. They've gone for that high, I think. Yeah. They've swept the liquidity. So after the close of yesterday, let's see if we had a bearish reversal pattern on 4 hour. Let's see. So you can see what we had on 4 hour yesterday. Mayor says bearish. Okay. So you can see what we had here yesterday on 4 hour time frame. Now we had what looks like a bearish reversal pattern here. We could call this a Marubuzu candle, or if you're not too sure of the candlestick pattern on 4 hour, I always advise that you go down to 1 hour time frame. I always advise, so you can see on 1 hour, you can see the pattern we had on 1 hour. We had a shooting star, and the next candlestick closed bearish. So this is a bearish reversal pattern. And if you go back to 4 hour, you would see if you apply your Fibonacci, from this swing high to this swing low, price is the premium area, and also we had a fair value gap here, which I think price has filled. You can see this fair value gap. Victory says bearish. Okay, so you can see the fair value gap that was created here on 4 hour. That could be the reason for all these retracements. This fair value gap could be the reason for all these retracements. Okay, so what they did, you could see there were several attempts to fill the fair value gap. There were several attempts. This was the first attempt. And after the formation of this pattern here, most retail traders will have their stop loss at this high of this candle. They pushed price back down to this area. They pushed it back up again. They still did not fill the fair value gap. This was a trap for retail traders. The normal retail traders would have executed sell after the formation of this shooting star. And you can see they finally swept all the liquidity that was residing at this previous high. I think that's what played out on DXY. So they swept the liquidity, then you can see price drop from that area, created a fair value gap. I'm sure it's created a fair value gap. Let's see. There's a fair value gap here, and I think that is the reason for this retracement. Let's go down to lower time frame to confirm. Let's confirm. Let's go down to 1 hour. I'm sure it's created a fair value gap. There's a fair value gap it came to fill here. Let's just confirm. Okay, so can you see this fair value gap 15 minutes time frame? You can see this fair value gap here. I think that's the reason for the retracement. Can you see that? Can you see that? Can you see that? Price pulled back, fill the fair value gap on the 15 minutes time frame, and you can see the candlestick pattern that formed here. We had a shooting star and a bearish shooting star. This is a bullish shooting star. Then we have a bearish shooting star. So the normal retail traders would have executed sell after the formation of this bullish shooting star. Those who don't know how to trade candlestick pattern, or those who are in a hurry to execute trade, they know they would have executed sell after the formation of this candlestick pattern, and their stop losses will be residing at this previous high. So what they did here was to sweep the liquidity before pushing price down. Okay, so my take on DXY for today's market is sell. Is sell. Okay, I'm bearish on DXY today. Technically, DXY is bearish. Okay, so let's look at currency pairs. If there's any pair you want me to analyze, let me know in the comment section. Let me know in the comment section if there's any pair you want me to analyze. So let's start with GBP USD. Okay, so GBP USD, this is 15 minutes time frame. Let's start with the daily time frame. So yesterday candle closed strongly bearish. So strongly bearish yesterday, and you can see here we had let's go down to 4 hour at this point. We had this fair value gap on a daily time frame. You can see that. Okay, we have this fair value gap. Price came back, broke out from that fair value gap. And I think that's because there's a fair value gap on the lower time frame. It could be 4 hour, it could be 1 hour. Let's go down to 4 hour. Let's see. So on 4 hour, you can see we had this fair value gap on 4 hour. Can you see that? Can you see that? We had this fair value gap on 4 hour time frame. 2 minutes, please. We had this fair value gap on 4 hour time frame. You can see price pull back, filled that fair value gap. Look at the candlestick pattern that formed. Look at the candlestick pattern that formed. You can see. So you can see we had a spiny bottom here, a doji in the bottom. After the formation of all this pattern, most retail traders would have executed buy, and their stop losses will be residing at these lows of these candles. So what they did was to come, sweep the liquidity before pushing price up. So right now, GBP USD is bullish. Also, this is 4 hour time frame. If you apply your Fibonacci from this swing low to this swing high, you would see that price is at a discount now. Can you see that? You can see price is at a discount area. So you should look for buys. Okay, you should look for buys. So that's my take on GBP USD. GBP USD is likely going to come and sweep the liquidity residing at this previous high, but its first target to be this high, this relative equal high. That will be its first target. We also have this fair value gap here. So if you are buying GBP USD, you want to wait for, you could set your TP, your first TP to be at this level 3532. 3532, that's about 60 pips from the current market price. That's about 60 pips from the current market, 60 pips from the current market price. But let's go down to 1 hour. So let's see. So you can see on 1 hour, let me go down to 15 minutes. So you could wait. You could wait. I believe it has created some fair value gap here. Okay, so you can see this fair value gap on 15 minutes. If you've not executed a trade on GBP USD, I would advise you wait for price to pull back to this zone. Okay, wait for price to pull back to this zone. You can see this is where you should have entered buy on GBP USD. This is where you should have bought. Remember what I told you when you open the chart, you want to identify where price starts moving. Okay, where the price starts going up, where it's coming from, where it is at the moment, and where it's likely going to. So if you look at what we have on 15 minutes, this is where the buy started from. You should have entered buy after the formation of this bullish hammer. So if you had entered buy from this point, 1.3446, by now you would have made close to 40 pips. Yes, you would have made close to 40 pips. Now the market has moved 40 pips in your direction. Why would you want to buy from the current market price? So wait for price to pull back at least to 50% Fibonacci level, which is equilibrium, or below 50% before you buy. That's my advice for GBP USD. If you don't have a buy trade on GBP USD, patiently wait. Also considering the fact that a major news will be released by 1:30, for United States. Most likely price will just range or retrace to this zone before the news is released. So patiently wait if you have not taken a trade. And like I said, the price will pull back to your point of interest is probability. That's why you need good funds. You need good capital to be able to manage risk. Okay. To apply proper risk and money management, you need good capital. So if you have good capital, if you're trading above 0.01 lot size, let's say you're even trading 0.03 lot size, you can go in with 0.01 lot size from the current market price. Then when price pulls back to this zone, your point of interest, you go in with 0.02 lot size. Because if price just keep going up from this point, you will miss this move. Irrespective of the fact that you were able to define the trend of the market, you will still move. You wouldn't make any money and you'll feel bad about it. That's the reason some persons just, execute trade to FOMO or revenge trade and they just take trade and take. Or you feel very bad that you knew the trend of the market and you could not make money from that move. So always be in the market. Take that risk. Come to your PO, you can take more. Okay. I hope that is there. Any question on GU before moving to the next page? If you have any question on GU, you have a contract review, probably something I'm not seeing on the chat. Let me know in the comment section. We are here to learn. Okay, we are here to learn. You might be saying something I am not saying on the chat. I don't claim to know it all. Okay. If there's anything you're seeing on the chat that I'm not seeing, please let me know. I'll learn too. Okay. So let's move to the next pair. Okay, gold and UCAD. Okay, we'll definitely analyze on gold. Okay, so let's move to the next pair. Let's see Euro USD before we look at UCAD and gold. Okay, Euro USD positively correlated with GBP USD. So Euro USD should be bullish also. You can see Euro USD is bullish. It has created a fair value gap here. So I would advise you could wait for price to pull back to the discount area. You don't want to buy from the current market price. This would be a very good area to consider buying Euro USD. Okay, wait for price to pull back. For those of you who use the zigzag indicator, okay, for those of you who use the zigzag indicator, just wait for price to pull back to this zone. Ensure there is a zigzag below a 15 minutes candle. Okay, wait for zigzag to appear below the 15 minutes candle before you buy. Okay, wait for zigzag to appear. Wait for a bullish reversal pattern also to form before you buy. Simple. Okay. So that's it. For those of you who would like to learn how to use the zigzag indicator to identify your entries, okay, entries, you can also use it to identify structure, higher highs and higher low. All you have to do is just get the course, my course on Forex trading. You learn about market structure, resistance and support. You learn about what else again? Candlestick patterns, okay, and also how to manage risk in trading a lot. You also have access to Zoom classes. We meet at least 3 times in a week. So I would advise that you get the course. Okay, the course is designed for new traders and those who are struggling to earn consistently from the market. Get it today for just 5,000 naira. From next week, you have to pay 10,000 naira. So I would advise. But if you are doing well in trading, you don't need the course. If you are doing well, if you are making profits consistently, you don't need it. But if you're a new trader or a struggling trader, you should get the course. You should get the course. Okay, so let's move on to Euro USD. Like I said, just wait for price to pull back to this zone. Let's just look at the daily time frame. Okay, let's look at the time frame. So yesterday candle, as you can see, it closed as a spinning. It's closed as a spinning bottom. You can see it's closed as a spinning bottom, and I think probably we had a fair value gap here on a lower time frame. That could be the reason for the retracement. 4-hour time frame. Okay, so if you go down to 4-hour time frame, you can see we had this fair value gap on 4-hour, Okay, let's go down to 1 hour at this point. Show there's a fair value gap price came to fill at this point. Okay, let's see. Okay, good. Can you see the fair value gap? This is the reason for the retracement. This is the reason for the retracement. Okay, so let's see. Can you see that? You can see that is the reason for the retracement. Though that gap has not been filled, but that's the reason for the retracement. Okay, so let's see. Okay, yeah, so that's it. This could also be the reason price didn't get to that to fill this resistance area, this resistance zone, this resistance turn support. That could also be the reason price didn't come to fill the fair value gap. Maybe you just tested that. You can see you just tested that resistance turn support. You can see that's the reason price didn't come to fill the fair value gap. So this morning, Euro USD has created the fair value gap. So this is where you should be looking for your entries. As you can see here, this is where you should have bought. This is where you should have bought Euro USD this morning. You can see we had this is an AMA, and we had this candle engulfed this AMA. You can see what played out here. The normal swing traders, the impatient traders would have executed buy after the formation of this bearish AMA. And the instruction is when a bearish AMA forms like this in a downward trend, you should wait for the next candle to close bullish. But most retail traders would have executed buy after the formation of this AMA, and their stop loss would be residing at the low of this candle. So what they did with this candle was to come sweep the liquidity, their stop losses, kick them out of the market before pushing price up. You can see that. So it is bullish at the moment. It is bullish at the moment. Can you all hear me? Can you all hear me? Okay, so that's it for GBP USD. Let's move to the next pair. Someone said UC EU. Okay, U card, USD card. USD card should be bearish. USD card should be bearish. USD card should be bearish. So let's start with the daily time frame. Okay, so this is a nice setup on USD card. Yesterday we had what looks like a smiling top. Okay, we had what looked like a smiling top. Also, let's see, we had a fair value gap here. Okay, that gap has not been filled. They might fill that gap before going bearish. So we had this high 2 days ago. This was the high of 2 days ago. So what they did yesterday was to sweep the liquidity. The normal traders have executed sell because what we have here is an engulfing pattern. This is an engulfing pattern. The normal traders have executed sell, and their stop losses will be residing at this high. So what they did today was to sweep the stop losses residing at this previous high. That was what they did today. Okay, and after sweeping the liquidity residing at that previous high, you can see the pattern that formed. This is a bullish spinning top, and after the formation of the bullish spinning top, you are advised to wait for the next candle to close bearish. So if the current, let's go down to if today's candle closes bearish, that would be a strong confirmation to sell USD card if today's candle closes bearish. But let's go down to 4 hour. After the close of yesterday candle, what pattern do we have on 4 hour time frame? Let's see the pattern we had on 4 hour time frame after the close of yesterday candle. Okay, so let's go down to 4 hour. Start Dewale. Good morning. Thanks for joining. So you can see what we had on 4 hour yesterday. Can you all hear me? Can you all hear me? Please confirm you can hear me. So you can see the pattern we had on 4 hour yesterday. We had a bearish pattern on 4 hour yesterday. We had a bearish pattern after the close of the spinning top on the daily time frame. You can see the pattern we had here. We had a shooting star. We had the next candlestick close bullish. Now the rule is when a shooting star forms, when a bullish shooting star forms in an upward trend, you wait for the next candle to close bearish before you sell. So yesterday, before the market closed, we had a shooting star. The next candlestick closed bullish, and this one, the next one, the candle that followed closed bearish. So this would have been the entry for USD card sell. Okay, this would have been a good entry for USD card sell. Now, the normal retail traders would have executed this trade. That's why I advise that any setup you see from 5 p.m., don't take the trade. Any setup you see from 5 p.m., most times the high of that setup, like we have it here, will be used as liquidity the next day. Okay, it will be used as liquidity the next day. Okay, so that's why I advise that any setup you see from 5 p.m., don't take those trades. Okay, so you can see, so we had an engulfing pattern here. So what they did this morning was to come and sweep the liquidity, because most retail traders have their stop losses here. So what have they done here? They've swept the liquidity, and you can see the pattern that is forming you can see the pattern that it has formed. So like I said, they might want to sweep this liquidity here. They might still want to come and fill this fair value gap. Okay, they might still want to come and fill this fair value gap, because right now most retail traders will be selling and their stop losses will be residing at this previous high. So they might want to come and fill this fair value gap. So in this case, if you want to take a trade, if you want to take a trade on USD card now, I don't want to wait for price to come and fill this fair value gap. Like I said, it's probability. There are no guarantees. Price can just keep dropping from this point. So what would I do? If I'm going to take any trade from this point, my stop loss will be like 10 pips or 15 pips above the high of this fair value gap. That is where I will set my stop loss. Okay, that is where I will set my stop loss. 10 pips or 15 pips above this fair value gap. Now, if price now keeps dropping from this point and does not come to fill this fair value gap, if price breaks out from this support it's created, yeah, I can now bring my stop loss maybe few pips, 10, 15 pips above this high. But initially, if I'm to take this trade from this point, my stop loss will be 10, 15 pips above this high. Then when price breaks out from this support, I can adjust my stop loss to maybe 10, 15 pips above this high. Exactly. So that's my take on USD card. USD card should be bearish today. Ayat, Ula, good morning. Thanks for joining. Thanks for joining. Okay, good. Okay, we'll look at gold in a few minutes. We'll look at gold in a few minutes, Mr. Patrick. Okay. If there's any pair I want me to analyze, please let me know in the comment section. So that's my take on USD card. Sell. GU, buy. Wait for a retracement on GU. Wait for price to pull back to a discount area before you buy. And EU also, wait for price to pull back to a discount area. Ensure those fair value gaps are filled before you buy those pairs. Okay. And for UCAD and bearish. So let's go down to, let's look at gold. Gold. Gold has been bullish. Let me start with the daily time frame. Yesterday, gold was bullish. Okay. So you can see gold came back to fill this fair value gap. I think it filled this gap. This was Tuesday, Wednesday, Thursday. Yeah. On Tuesday, gold came back to fill this fair value gap. And after filling that fair value gap, what pattern is here? What we have here is an engulfing pattern. This is an engulfing pattern on gold. So this tells me gold is set for buy. Gold is set for buy. Don't sell gold. Okay, then if you go down to 4 hour, I'm sure price wants to come fill a fair value gap. Yes, it wants to come and fill a fair value gap that it's created here. You can see these are the areas you should look for buys on gold. These fair value gaps. This is where, if I'm to trade gold, this is where I will be looking for my buys. Now, price might not pull back to this area because you can see we have this resistance here. You can see we have this resistance. For those who trade resistance and support, This is a breakout from a resistance, and after a breakout from a resistance, price is expected to pull back to retest that resistance on support before going bullish. So a 4-hour candle closes bullish. For those of you who use the zigzag indicator, wait for price, check your 1-hour time frame. If 4-hour candle closes bullish, check your 1-hour time frame. There must be zigzag at this level on 1-hour time frame. If there is zigzag at this level at 1-hour time frame, you should look for buys. You should buy gold. Okay. 4-hour candle should close as a bullish reversal pattern. Your zigzag should be below a 1-hour candle. If there's no zigzag below a 1-hour candle, there's a high probability they are coming to fill this value gap. Don't take the trade unless there's a zigzag below this candle. That is when you should look for your buys. I hope that is clear. I hope that is clear. Okay. Wait for a bullish reversal pattern before you buy gold. That's my take. My bias for gold is buy today. So it's likely price will pull back to fill this value gap, or it just keeps going up from the current market price. You have to see a bullish reversal pattern must form. A bullish reversal pattern must form before you buy. I hope that is clear. So my take on gold is bullish. And if you are buying gold, your first target will be this high. It's an area of liquidity. Then you could set your second TP could be this high on gold. That's my take on gold. Is there any other pair you want me to analyze? You have any question? Let me know. Let me know. If you have any question, let me know. Which other pair do you want me to analyze? GJ, okay, we'll look at GJ. Clement, a few minutes, we'll look at GJ. What I see on BTC, what I see on BTC, you can see we have this fair value gap, which is in confluence with this resistance on support. So BTC might come to fill, okay, it might come to fill this fair value gap, but this is not the right time to sell. You cannot sell BTC now. You cannot sell BTC. You cannot sell BTC. If you sell BTC, you'll be taking a very high risk. Where did the price start dropping? Price start dropping from this point. Price started dropping from this point. So you cannot sell from this point. Best you look for buy setup. Look for buy setup. You cannot sell now. You cannot sell on BTC now. You should look for buy. If you want to sell BTC, you would at least wait for price to pull back to this fair value gap. This is where, so where price is now is no man's land. It is neither bullish nor bearish. It is neither bullish nor bearish. So it will not be wise to even take any trade on BTC USD. But if you want to take a risk, you can decide to sell. Your stop loss will be at this high. Yes, if you want to risk selling, then your TP will be at this fair value gap, because that's where price is likely going to drop to before it buys. If you want to risk it, okay. I will not take this kind of trade. Price started dropping from this point. Why should I be selling from this point? Doesn't make sense. Doesn't make sense. Okay, so I think BTC will still drop a little. It's still going to do a little sell. Yeah, it's likely going to sell. You can see here that it came to fill this fair value gap. I think you can see this fair value gap on BTC. It filled the fair value gap. I think. Yeah, I think it filled the gap. Okay, I think it filled the gap. Yeah, and you can see we also had this support here, non-resistance. Can you see it? So there was strong rejection. You can see the pattern that it formed here. It's a bearish reversal pattern. It's a bearish reversal pattern. If you go down to lower time frame, let's say 1 hour, there could be a shift in market structure on, let's say, 15 minutes. Okay, so it's a bearish. You can see here we had liquidity was swept from this high, and we had this low, so there was a shift in market structure at this point. So this is a bearish structure on 15 minutes time frame. It's a bearish structure, but price might still want to pull back to fill this gap. Okay, well, so that's my take on BTC USD, GJ and Euro JPY. Okay, GJ is bullish. Said the news that was released for Great Britain was positive today, and Japanese yen, that is yen basket, is bearish. Yen basket, so you should be looking for buys. You can see you've already missed the move on GJ. I'm a massive profit on GJ. I'm a massive profit on GJ. Massive profit. I'm a massive profit on GJ. I took a buy yesterday. Let me check my entry price. I took a buy yesterday on GJ. I started buying GJ from 19800, 19800, over 100 pips on GJ. I've made 100 pips on GJ, so you should not enter this trade. Don't take this trade. Look at the chart on the 5 time frame. Where did price start going up? Price started going up from this point. We had what looks like an inverted hammer, right? At this point, let's go down to 1 hour so that you see it clearly. You know where price starts buying. Let's go down to trading is not difficult. It's not complicated. We just try to make things so difficult for ourselves. We just have to make things so difficult for ourselves. Greed and fear is the reason most people are losing money in Forex. Technical analysis is not the problem. Strategy is not the problem. It's just greed and fear. Look at where price started going up. We had this inverted hammer. We had this inverted hammer. We had this spine top. So you should have entered buy from this point. This is where you should have bought. Okay, this is where, let's say, yeah, you should have bought from this point. This is where you should have bought. Now, if you missed this first move, you had another opportunity. You would have entered buy after this formation. You see this pullback here. I think a fair value gap was created here. That's the reason for this retracement. So the second opportunity was from this point. After the formation of this bullish candle, there's a fair value gap here. You can see this gap here. We had this tiny fair value gap on 1 hour time frame. You can see. Can you see that? That's the reason for that retracement. That's the reason for the retracement. So this was the second opportunity. So if you have missed the first move, you've missed the second move, you shouldn't buy from this point, because if you look at 4 hour, it is obvious. On 1 hour, if you apply your Fibonacci from this swing high to this swing low, where is price now? Price is at premium. Why would you want to buy at a premium area? Why would you want to buy at a premium area? Let's go to 4 hour. You can see on 4 hour, apply your Fibonacci. Apply your Fibonacci from this swing high to this swing low. Price is currently at a premium. So why would you want to buy at a premium? It doesn't make sense. Even if GJ would do 1,000 pips from the current market price, you don't want to jump in and start buying from there. It's at a premium now. So today, GJ is likely going to sweep this liquidity and also fill this fair value gap. That's what is likely going to play out on GJ today. Between today and tomorrow, GJ is likely going to hit this zone. GJ is likely going to hit this zone, because if you go by this 4 hour time frame, if you apply your Fibonacci from this swing high to this swing low, this will be a premium of this range. This is premium of this range. You can see that. So you cannot buy now. Forget about buying GJ now. Forget about buying GJ. If you take a buy trade on GJ now, it will be as a result of FOMO. Fear of missing out. You can't buy GJ now. Cannot buy GJ. Euro JPY also should be bullish. We analyze the fundamentals. The Euro news was positive for Euro. It was positive. Yen is bearish. So it's the same thing. They should be moving in the same direction. I don't need to analyze it. Let's just see the charts. It should be bullish. You can see it's bullish. So you cannot also buy from the current market price unless you're comfortable taking high risk. Okay, if you're comfortable taking high risk, Euro JPY is likely going to come and fill this fair value gap, this gap here. Okay, it's likely going to come and fill this fair value gap. So it's almost close to filling that gap. So it will not make sense for you to start buying. This is where you should have bought. We had an inverted hammer here. If you had missed that move, started yesterday, if you had missed that move, just can see here we had a fair value gap here too. Okay, I think there was a fair value gap expected here. This is 1 hour time frame. If you can't see the fair value gap here, I'm sure if you go down to 15 minutes, as a trader, you need to learn how to use multiple time frame for analysis. Very important. You have to be a pro in analyzing multiple time frame. And those are some of the things you will learn when you enroll for mentorship, when you get the trading course. Those are some of the things you learn. You have to know how to do top-down analysis. Okay, so do we have a fair value gap here on 15 minutes? No fair value gap here. I'm sure there is a fair value gap. Let's go down to 5 minutes. There is a fair value gap that price pulled back to fill. I know there is a fair value gap it came to fill, and I'll figure it out. Okay. So you can see we have this fair value gap here. Let's see if it's actually got to this. Can you see 5 minutes? Let's see if it actually came to fill this fair value gap. Let's see. Okay, so we have this fair value gap. Let's see. Let's see if it actually filled that gap. Let's see. Okay, so you can see that fair value gap. I think that's the reason for the retracement. That's the reason for that retracement. You can see this fair value gap. Let's see. Let's see. So that's the reason for. So immediately price tested the fair value gap. We had a bullish reversal pattern here. We also had a bullish reversal pattern here. So if you had missed this move here, you would have taken a buy at this point. If you didn't execute from this point, this would have been the best entry. So if you have missed all this retracement, you had opportunity here. You also had another opportunity here. Okay, so this is not the right time to buy. If you want to buy, you can see it has created fair value gaps here. If you want to buy, you should wait for price to pull back to this area if you want to buy. Okay, so that's my take. Though price might not pull back to this zone, okay, it's all probability. Price might not pull back to this zone, but if you want to buy, I will not advise that you buy from the current market price. Hope that price will pull back to this zone so that you can join the bullish trend. But if price does not pull back to this zone, then you just have to accept that you've missed this opportunity and wait for a better opportunity. Any other question? Is there any other question? Is there any other pair you want me to analyze? If you're yet to give the video a thumbs up, please give it a thumbs up so that others can get to see this video. And if it's your first time participating in the live stream, please subscribe to the channel so that anytime I come on live, you get notified by YouTube. Any question? Any question? Any question? Any question? US 30. Mr. Patrick, you trade all you trade all the instruments. Okay. uh, let's see US 30. Please, if you are new to trading, ensure you get my course. You need it. You need it, please. I don't want to hear that you blow your funds trading Forex. I don't want to hear that you blow your funds. Seek knowledge first, education first. I tell people when you have the right knowledge, you will attract capital. But most people, they go get capital first without some proper knowledge. That is why there is high failure rate in the industry. People are just focused on, let me get capital and start trading without the right knowledge of trading. So please, you need to start the right way. Your foundation in this business will determine if you'll be successful in the long run. Your foundation, if your foundation is faulty, I'm sorry, to take years for you to recover. start trading forex and you are making huge losses, it will take years for you to recover. So please start the right way. There's a saying that someone who has been through hell can get you out of hell. I've been through the hell of forex trading. I've been through it. So I don't want people to go or experience the kind of pain that I experienced losing money in this market. And that's why I decided to start teaching people forex. That's why I decided to start teaching people forex. You need to be told the truth about forex trading. A lot of mentors out there just tell you lies so that you can just, you know, entice you into trading with sweet words. I'm here to tell you nothing but the truth about forex. If you want to hear the truth, you need to follow me. Okay, so let me start with the weekly. Let me start with the weekly. So right now on the weekly time frame, as you can see, price is at a resistance area. So if you want to get the course, you can just send me a message on WhatsApp. Send me a message on WhatsApp. Okay, so you can see that US30 is at a resistance area now, a key resistance area. A key resistance area. It's at a key resistance area. So after the close of last week candle, let's see the pattern we had. So what played out here after the formation of this engulfing, the normal retail traders will set their stop losses at this high. First thing they did was to sweep the liquidity residing at this previous high, sweep the liquidity residing at this relative equal high. So that's what they've achieved. They achieved yesterday, no, last week. They swept all the liquidity. So after the close of last week candle, let's see what we had on a daily time frame. So we had a bearish reversal pattern on the daily time frame, as you can see. So if I'm to take any risk on US30 now, it will be sell. It will be a sell because what we have here, a bearish reversal pattern on the daily time frame, you can see. Now this pullback here, there was a fair value gap, I think, that was created after the formation of this shooting star. Let's just confirm. That's the reason for this retracement. So if they fill that fair value gap and there's a strong rejection from that fair value gap, it means US30 is likely going to sell. It's likely going to sell. Let's say 4 hour. So you can see on 4 hour, this is the reason for the retracement. Can you see the fair value gap on 4 hour? That's the reason for the retracement. Can you see that? And after price filled that fair value gap, there was a strong rejection from that zone. So if I'm going to take any risk on US30, technically, okay, technically, US30 should sell. US30 should sell, okay? It should sell. And this is 4 hour time frame. So you can see if you apply your Fibonacci from this swing low to this swing high, okay, you want to see price. If you want to buy, if what you are saying is buy, the best time to buy will be when price gets to a discount area. You cannot buy from the current market price. You cannot buy from the current market price. You have to wait. You see this fair value gap here at the discount. You see this resistance turn support. These are the areas you should consider buying. So you have this resistance turn support, which is in confluence with this fair value gap. You can see is in confluence with this fair value gap. So this will be a very key area to consider buying. So if you are selling, your target should be these zones. You should target these zones. This will be your take profit if you are selling. And if you are considering buying, you should wait for price to pull back to this zone. If a bullish reversal pattern forms, your zigzag is below a candle, then you look for buys from that zone. That's my take on US30. If I'm going to take any trade on US30, if I want to take any risk on US30, it will be a sell and not a buy. It will be a sell and not a buy. Any question? Any question? Any question? What are the challenges you're going through in trading? What are the challenges? Let me know. Let me know. Let me know. Do you have any question? In the next 3 minutes, we'll be done with this class. Do you have any question? Is there any other pair you want me to analyze? Let me know in the comment section. Let's just look at NZD USD. NZD USD. Let's see. Let's see NZD USD. Okay, NZD-USD, this is a bullish pattern. This is a bullish pattern. Okay, this is a bullish pattern. Let's start with the daily time frame. You sure wouldn't be selling New Zealand USD from the current market price. This is where price started dropping on the daily time frame. Price started dropping from this point, so you cannot sell from this point. So you should look for buys on New Zealand USD. You could wait for the news for the dollar to be released before you take a trade, okay? Because what I'm seeing here on the 4-hour time frame, it's like all these lows might be used as liquidity. Okay, so yesterday we had this. Most of the traders that have executed their buy trade after the formation of this spinning bottom. Most of the traders have executed buy and their stop losses have been at this low. So what they've done this morning was to sweep the liquidity, you can see. And after sweeping the liquidity, we had an inverted hammer. The next candle has closed bullish. So price is expected to start going up from this point, technically. Okay, but because of the major news that will be released, they might still want to use this low because the normal strategic traders would have jumped in to start buying and their stop losses will be at this low. So they might still want to use the news to sweep the liquidity before pushing price up. But for USD card, you can see price has been in a range. You can see USD card, sorry, NZD USD, you can see it has been in a range since the 20th of August. Yeah, that was yesterday. You can see it has been in a range. So with this, I'm sure there's a high probability they will come for these lows. There's a high probability they will come for these lows before pushing price up. Okay, before pushing price up, I'm sure they will come for this low. This is a ranging market. They will come for this low before pushing price up. That's what I see on NZD USD. So that'll be all for this session. I appreciate you all for your participation, Mr. Sam, Mr. Debayo, Mr. Victory. Victory, what's up? You've not been showing up for class. Hope you're okay. Victory. Mr. Isaiah, Joro Boy, Mayor, Mr. Richard, Mr. Dewale Adeboye, Ayatullah, and Mr. Patrick, Mr. Clement. Thank you very much for your participation. And I wish you all a profitable trading day.